Hey everyone, welcome to the weekly update. Last week was pretty difficult for the bear case. We got this breakout here and it was very bullish, especially on Qs. Let's talk a bit about what happened. So we had this consolidation here. I posted it multiple times in the VTARS daily as it was building. And then we had a fake breakdown. Fake breakdowns or breakouts give the best reversals. Then we had a reversal and it went up to the target zone, which target zone was the beginning of the gap fill, and then the gap fill, and much higher we have at 425.91 we have the beginning of the supply zone. Going back onto the hourly, or let's go for hours. Uh, this is what I think happens next week. We have Friday was positive for the bullish case. We had a couple rejection candles. We had a couple sell triggers on the DeMark reversal points, and over the weekend, the depth ceiling discussions are now going very well. So most likely next week there are two things we need to look out for. One is what happens with the depth ceiling talks, and for now it's not going very well. And then Nvidia earnings, which might put a cap on the tech rally. It might also make it go even higher, and we have to get out of the way. I got in short position on Qs along the way, averaged down twice, and I'm down about 20% on the full position. Uh, if it goes green, I'm setting a stop loss at break even and letting it see what happens. But I don't really expect, unless we get like a big reversal early in the week, I don't expect this to stick. And by big reversal, I actually mean a decent drop with volume, uh, like more than 1% candles, ideally much bigger candles and stuff like that. Unless we get that in the first 3 days of the week, I don't think we're getting it. And another thing to note is the volume pattern. So if we get this was sort of a rejection, let's say. So we got a first rejection candle with higher volume. But if we see low volume pullbacks on let me find an example that would be bullish. Like this here. So we had a big drop here with spikes in volume, then another spike in volume which made the move for seem real. And then when we went up again, the next couple of red candles were on lower volume than previously. So that meant it's not going to push it lower compared to the previous low. And if we see this here as well, like for example, we get this push back down and then we slowly drop to let's 415 or maybe 410, and the volume is something like this or like this here, it's not really that bearish. And I would expect we will bounce up and go for new highs. So if the move is for real and if we go to 400, like if it's a move that can take us to 400 or even below it, it has to come with big candles, with lots of volume, and with high devol days. Unless that happens, this is more like a dip to buy and get out of the way, ideally green or at least break even, and then we load up on shorts higher. So for next week, this is kind of what I expect will happen. I'll show the other stuff in a minute. Um, the minimum we'll see is a pullback to 415. I think it actually goes for the previous week's low, which is a horizontal level as well, and a back test of this breakout here. And uh, if this is bullish, this is the minimum, what I think we will see. Then we maybe overshoot a bit, turn into support, then go back up, and we will go even higher. I think the we might even see the cap at 425, the supply area. So we might see even 425, not necessarily next week, but by the time this rally is over. Now let's look at some of the other stuff that happened. Surprisingly, not surprisingly, or VIX. I like what I saw in VIX. VVIX was green, got a bit of a rejection, but it was positive. Don't know why I'm not getting the values here. Probably a bug on trading view. So it was 641% up. VIX was green as well for 80. What else? Uh, Yields were very green. All of the week we had the first green week in yields in quite a while. Dollar was very green. On Friday it pulled back a bit, but it reached its first horizontal target, and I think it goes even higher. With the caveat that if the debt ceiling stuff doesn't work out, the dollar should be dropping quite hard. But until that becomes apparent, the dollar should be continuing up, maybe hit this channel top, and then it should drop like a stone. Like if the debt ceiling stuff is not resolved, the dollar will dump. Don't assume it's gonna be bullish. Then there's this thing like let's see, QQQ and US 10 yield. Into new rise scale, and let's invert it. So you see that generally speaking, Nasdaq is inversely correlated with the 10-year yield, and it's been following it quite accurately lately, except that this week it went the other way. Like Nasdaq rallied and the 10-year yield went up as well. In this case, down because it's inverted. And I see no fucking reason why this should persist. Someone is wrong, and it's tech. When this thing finally reverses, it should drop quite a lot. But again, even if we reverse next week, if there are signs that it's not for good, we have to cut the short positions and wait for it to go higher, maybe even ride it as it goes higher. Um, what else do we have here? Oh yeah, let's look at mega caps and the candles. Tesla had the green one, the green candle. It hit the first target at 180. Looking at the delta profile, it can go even higher. Apple had saw a bit of a rejection. Nvidia saw a bit of a rejection. Google saw the nicest rejection, and it also got a sell on the mark reversal points. Let's see if you got it on weekly. No, not a weekly. Google, same thing. Amazon got a sell the previous day and had a bit of a nice rejection candle as well. Microsoft, no rejection. Meta, smallish into resistance. We finally hit that gap fill start level. Netflix, small rejection. Xom is a special case. I'll talk about it separately. And even Qs saw a sell on the previous day and also a sell on the weekly. Now, this indicator, the remark reversal points, it is just another indicator that you use in collaboration with other stuff. Like you never like this was a perfect tick of the bottom. Same here. This was very close. This wasn't very good, although 2 weeks later, this is the weekly. It was lower than it is. Also, this wasn't a full sell, although the next week it went lower. Same here. Next week it went lower to here, but you use it just as another data point when every other thing indicates the direction. So we may not stop the rally, like here it may go even higher, or here it may go even higher, but it's a good indicator that within the next week or two we will see lower prices than this week. And the fact that we got it both on the daily and the weekly is a good thing. See here on the daily it was a good buy, it was a good sell. This it took a while to get to the lows. This wasn't good, although again the following few days were quite bullish. Yeah, let's look at mega caps now. I'm gonna open them all and then we talk about it. Okay, so Apple, like I said last week, it didn't have that big of an expiration, and I didn't expect it to move a lot based on it. I still think we might see a retest of 170, maybe even lower to slightly below 170. So this is 171, this is 168. Somewhere in this range should be the level where it stops, with the extreme being filling this gap, 167.04. The extreme move would be that. Let's look at MAs as well because they're important at this point. And assuming it happens over 2 or 3 days, the lowest this can go is this 50 MA. So this 50 MA should continue going up like this. And if we hit it on Thursday or Friday, I think it will also fill the gap. So this is target one is 20 MA, which would be 171, 170 to 171. Target two would be the 50 MA, which would be 167-ish, 170. Let's take these things out. Okay, Apple. Let's look at the profile. Last week, it wasn't looking that bullish, not necessarily Apple, but mega caps in general. But a ton of OI came in, especially for Nvidia. Like for example, Nvidia didn't have any 300 OI, or it had 300 OI, but it had very little 300 OI for this week. But Nvidia was fucking crazy the entire week. Like starting Wednesday when it went up, it had like 70% of the day's volume in options in weeklies, and on Wednesday it was 2DT, on Thursday it was 2DT, on Friday it was 1DT, 0DT, sorry, minus one on each one, and it was just crazy. Like the OI for Nvidia went crazy, and uh, a ton of new OI came in. That's why it actually went up. So for Apple, we had that expiration. For next week, we had a bit of OI for 180, and 180 seems to be the biggest level for calls now. So I think we hit it. Like I said, not necessarily instantly, but if we hit it, I would be shorting it. I think it's worth a short if it goes to 180 directly. But if it if it goes down, it's still a buy, and uh, target is to go even above 180. 180, 185 should be the target. And if we look at this, it's the all-time high. So all target is the all-time high. If we hit the all-time high, it's a short. Other than that, just continue riding it up if we get a pullback. Let's look at volume as well. Quite a bit of volume all the way up to 182.5 for next week. Delta wise, it was actually more put delta traded, but volume wise, a lot of calls for next week, and we can see it here as well. So relatively bullish. I wouldn't want to get in here to get 180, but if we pull back below 170, it's actually pretty decent. Apple, Amazon, because it's the next in line. So for Amazon, we're 116. Let's look at OI. We are here. Still has a decent ramp, still has puts to burn. It has by far the best looking profile here. And I think it's pretty easy to get up to 130. If we get a pullback, so we are at 116, 100 would be support, but seems very, very far away. I would assume 109, this line here would be the support, but it can be even more bullish. So what's 131? 131 is this basically. Yeah, this is probably the target. This was the, can be even higher to 143. Like to fill this gap here. So pullback goes here, then it continues going up until June. Something like this. Let's look at 110. So 110 is around here. It's a decent level. It's hard to tell what the support will be like. It can be even this on 114, 13. Now 110 seems to be the reasonable one. Like we lose 116, then just go one level back and then jump up and go to 120 for sure, but it can still keep going. So target 1 here, target 2, target 3. Let's look at volume. Some volume going to 120. Deep in the money puts, but we don't care about those that much. $115 puts for June. These are short dated now, so they might be an okay thing to do. They just take profits immediately and then switch long or something, so they're not that scary. Okay, Google. We are at 123 on GOG. Here, 123, around here. I don't really like it. Like 125 seems to be the cap. I don't see how it fills this gap here. I'm assuming it's doable, but that's an extreme move. So that would be 130. It's the top of the supply zone. So first one was this. And somewhere in this range it should stop for good. Google, same thing. Somewhere in this range it should stop for good. Let's look at volume. Holy shit. That's a ton of positive volume for GOG. And up to 130 as well. On the other Google, not as bullish, but it has up to 126 and then a big gap here. But if it goes to 125 again, I think the volume will come in. And delta profile, so we are at 122 around here. Same kind of story. Up to 130 is doable. But if we go down, where do we stop? $116 maybe? I don't think it fills the gap. Like at best it goes to here-ish, something like this. 115. So something like this. Stop here, go down to extended, and then it goes back up, goes in this range, and potentially as high as this, something like this. Amazon, I did Meta. Meta is looking the most bearish actually, the way it looks. It hit this target here. Still think it might fill the gap. Let's look at delta profile. There was that 180 position that had a lot of call delta, and from what I see here, I'm assuming it was rolled into August 200. So we had a similarly large position in 180C for May, and that position was rolled into 200C for August. So the person who was bullish there seems to continue to be bullish on Meta, and they rolled up. We are at 245-ish. 250, huge level. Some OI came in for next week. Let's see the volume as well. Quite bullish to 250, but not a lot beyond that. So it probably will go for 250 and then roll over. So this still stands. Gets a bit above 250 and then it reverses. It's already having a bearish divergence here. The short-term signal is starting to come in. Nvidia with this 3-day continuation. So let's look at OI because that's the interesting part. All of this does not exist, and we had a big chunk as large as this green one here that all of a sudden came in for 300 weeklies for last week. So those didn't exist last week. They just came in over time. The volume was pretty crazy. This will show the forward-looking volume. So even on Friday, 45% of the volume, no, excluding the 0DTE volume, which was around 70%, 45% of the rest of the volume was for the following week. So still very short dated. And with earnings coming up, I think it will continue. It might continue running up into it. It has the profile now. It can go above 300. I mean, it's already above 300. It's at 312, and the high was 316, 17. 330. I don't know. 350 is where it stops for good. Like this gap is unfillable unless new OI comes in. And let's look at the volume. Quite a bit of volume, up to 330. Some 400 optimistic for June and for next week. So we even hit this on Nvidia. I don't know, all-time high. 330. Regardless of if it goes higher, like I mean relative to 330, it will have a correction. Something similar to this. Like run up, run up, run up, run up, and at some point it has to drop a bit. If it gaps up on earnings, it's a clear short, honestly. How big was this? 10%, and not even that. Let's 11% almost. So it has to do a pullback. It went too exponential to not have a significant pullback, and it hasn't really dropped a lot since here. Then it's just straight up, straight up, straight up. So if it does the last leg up to the all-time high test, it or if it gaps up on earnings, it has to pull back at least 10%, and it almost certainly will. If you buy like a month out, it should be long enough to see it play out. And then it's the final push up. It's with bearish divergence. You see here, the final leg was extremely divergent, like this, and this was my bad. It was like this. So that's our June rally. We get a final push up, we get the pullback, then it goes up on the June rally, and it will be divergence, and that will signal the top of the rally. And this could come before earnings or after earnings. We don't really know. Based on the volume, I would say it comes after earnings, but it shouldn't go higher either before that. So if it pulls back, this level where the breakout started should be support. So 285-ish, no, 290, 290. 290 is the support, and if it goes higher, all-time high range is the target, 330 to 340. 346 was the all-time high. Tesla. Tesla as well was looking quite bullish. Lots of volume up to 200. And similar to Amazon, the delta profile permits it quite easily. We are near 180 now, so around here. Not the best looking ramp up to 200, but 200 is just huge, so it should be a magnet enough to pull us to it. After that, I don't see it going that much more, like maybe $5-10, but that's kind of it. It doesn't have the gap in OI is too large. So hit the first target here. And target, and it's also a channel resistance, it's horizontal level, it's a lot of things, so don't see any way it goes above 200. Tesla is the most bullish out of the everything from my perspective, so I think a pullback will only go to 167, 170 if we get a pullback early in the week. Now XOM. XOM is complicated. I don't like. Let's go back. Let's go to CVS for a second. Not because of this, but because of quarterly chart. So last two tops, week here, week try to go up, making lower highs along the way, then descending wicks here, UNH, same kind of situation, week, then a bigger rejection. It tried to go back up, now another week. Let me show you Oxy on the quarterly chart. Week, oh, started making lower highs. We got a sell on the quarterly chart on the DeMark reversal point. XOM, week, and continuation. I think there's a big chance and we have a setup for an engulfing candle here for XOM. Sell on the quarterly as well. I really don't like oil stock anymore. It has the same setup. Devon, weak. Uso, whatever. MRO, same. They all have the same look. Top rejections. Now we have some big candles. I think either by the end of the quarter they break down, or next quarter for sure. Oxy I already showed. CVX already has a sell as well. BTU is cold, but same kind of situation. This don't look well at all, and when oil will start breaking down, because it's all because of energy, um, that signals a hard landing. Like, oil wouldn't be doing this if the economy was strong, if the market was not going into a hard landing. This is the same situation with copper, or similar situation. We took out the previous quarter lows. Most likely we will go here to 3.3. Like, commodities don't break down when the expectation is of strong economy. These are canaries in the coal mine and should be heeded. So we're most likely, based on this alone, we're most likely heading into a hard landing. And multiple times in the past this has happened, including in bullish cases, like for oil going up into the towards the war in Ukraine. Like, this was very bullish, and then it broke out. Now it's looking very weak. All the oil names are looking quite horrible. On the daily, it broke the trend line. This is considered a bad. I will consider this a back test. Even if it goes a bit higher, there is no fucking way this makes it to the all-time highs again. And very soon it will turn back down and it will crash. So the warning is here. You just have to hit it. I'll also do the inverted chart. Does this look like a bullish chart to you? Like, it's a bottom, double bottom, and now it's breaking out of the double bottom. It's looking very fucking bad. Get out of energy positions. Yeah, that's still inverted. Yes, still inverted. That's kind of it. I I don't I won't do any of the individual names today. I'll keep it for next week. I want to see how next week plays out, because it depends a lot on what kind of pullback we get and how large it is. One of the reasons why um, I'm not that concerned about the market going up is the lack of breadth as well. The breadth is barely going up. That this bullish day that the market went up a lot in was only 58% up volume. So this super bullish day, it was 58% up volume. How can that even be possible? And for most of the day, including when it was up big, like on Qs, it went 2% up. On most of the day, while the market was 1.5% up on Qs, it was 52% down volume. This is distribution at its finest. Like, smart money was selling into all the crazy buyers, and it was also mostly 0DT impact pushing it up. Um, on top of this, the global um, liquidity tracker is going down. On let's compare it to SPY. So you see this tracks market movements pretty accurately, and any divergence is actually a good signal. For example, here the market went down while liquidity went up, and then the market had to catch up and go back up. Same here, liquidity starting going up before the market rallied. Here the market rallied while liquidity wasn't going up that much, and what followed was a huge drop. Now the market is going up into liquidity going down. This will resolve at some point, and it's not going to be in the market's favor. Signs are pointing toward the hard landing because of commodities, and I really think we will get a breakdown in energy pretty soon. Okay, that's it for today. Have a good weekend. Bye bye.